Walter here from the Daily Trader. I want to talk about capturing huge winners. You wouldn't believe how much using the extreme volatility of the markets to your advantage can help your trading. In fact, the really successful traders out there are those who actually use this to their advantage. So let me talk about how you can do this. And one way that you can do this is by capturing giant winners. Now, you never know when you're going to get a giant winner, but you do know how to capture these. And that's to essentially use some sort of trailing exit, some way of allowing an infinite number of pips to enter into your trade. If you use a hard profit target, you will never be able to capture an infinite number of pips. Now, obviously, it's unlikely that we're going to get a trade that just goes and goes and goes to infinity, especially in Forex. But it is true that you can take advantage of the fact that the markets really do move a lot. And by doing that, by using some sort of a trailing exit, you take advantage of this fact. And let me show you what I mean by that. So here we are in the euro. We're in the euro pound 4-hour chart here. Okay. I'm going to hit the F12 key here and advance one candle at a time. Actually, we did get a kangaroo tail right there, didn't we? But it wasn't down here on the zone, so I'm not going to take that trade. I want the, well, there you go. I want the market to go up here and hit the zone like that. So this right here is a definite sell signal. So I put my sell stop below the low here, right there, and my stop loss. So that's my sell stop right there. My stop loss goes up above the high, right there, and I'm going to let it go. Now, if I was going to have a profit target, I might have a target down here, and that would be about 35 pips, and I'm risking about 30 pips. Or I might have one down here where I'm going to make about 55 pips or 53 pips or so if I wanted, to take a target right around here just above this zone down here. So let's see what happens. Hit the F12 key and the market just takes off. So the market's gone. It's really going here. That's great, right? Good stuff. Well, guess what? It could go even further. The market could really go in this case. So I'm not going to have a profit target down here. Now, it would have hit my first target because it would have been right here, and I would be out of the trade. But instead, I'm going to use a trailing exit, knowing that I won't make a lot of money on all my trades, but on a few trades, I will make an absolute killing. So let's go here and hit the F12 key and advance even further. Okay, now I've got sort of this almost reversal type kangaroo tail thing looking straight at me. So I'm going to move my stop to break even or plus a few pips here. Now the market's broken through this zone, so that's a good sign. It suggests that the market may make a move down to this zone down here. And it does. It actually goes to that next zone right there. Now it's come up a bit. I want to close below this 85.27 level. And it does. Wow, look at that. It actually closes below that zone as well. So what I'm going to do now is I'm going to move my stop loss to just above this zone here, sort of where the tops of these candles are right there. I'm going to lock in that much profit, which is what? It's like 35 pips, 40 pips I've locked in. I want to see the market go lower, and I want to see it close below this next zone down here. It hasn't done that yet. Now it has. So now I get to move my stop to this one right here, just above that zone right there. So now I've locked in, how many pips have I locked in here? I've locked in 85 pips. I want to see the market close below this one now. If it can, I'm going to move my stop. Still not able to. Okay, it just did close below the zone there. So now I get to move my stop again to above this one. And this is called the ladder exit. I'm moving it down one rung of the ladder at a time. 40 pips to 90 pips, and now I've locked in 133 pips. Remember, the risk on this trade, what was the risk on this trade? The risk was 27 pips. There it goes again. Now I need it to close below this zone. If it does, I can move my stop, and it does. Wow. So now I get to move my stop to this level right here. How many pips have I locked in? Well, I've locked in, all up, I've locked in 198 pips. And remember, 109, that's almost 200 pips. And the overall risk on this trade was 28, 29 pips. We'll call it 30 pips. It's over 6 to 1 at this stage. $6 for every dollar risked at this stage. If it closes below this one, I get to move my stop. Okay, it's closed above that one. So I'm actually going to tighten it up a bit. And I'll put it just above these highs here because it, it doesn't look good. It looks like that because it closed above this zone, it looks like it wants to come back up. I'll give it a little bit of breathing room and see what happens. It stops me out. So there you go. So how many pips did I bag here on this trade? It was a 4-hour trade. It had about 29, 30 pips of risk, and it bagged 215 pips simply by allowing the market to go. How many days did this 4-hour trade take? It went from December 7th all the way to December 23rd, right? Wow. So that's most of the month there of December. A good chunk of December waiting for this trade to cash out. I hope that you understand the power of using a trailing exit so that you can capture those very large winners. Remember, there is extreme volatility in the markets, and we can use this to our advantage if we do allow our trades to sometimes turn into these very, very big, giant winners. I wish you very happy trading, and until then, until the next video, we'll see you soon.